What is up, my people? You know how my time is limited, so I try to come to you quick with the info. Early in the morning, it's not even sunny out, but I got to do the video now because now is when I have the time. Why I don't think the housing market is going to crash anytime soon. The first reason, last housing market crash, right? Housing prices went down like 20-30%, right? Like you have to hit a certain threshold before it's considered a crash, right? So right now in the last couple of years, housing prices have really soared and skyrocketed. They've gone up a whole lot. One of the main reasons is a limited supply, right? There's not enough houses for the number of people that want houses. If you think back to pandemic times, right? 2020, COVID stuff was going on. There were some textiles and things like that went up in value dramatically. And so builders couldn't even build new houses because the cost of building a new home was so expensive. It was cheaper just to buy a home that was already on the market than it was to build new property. You remember when lumber was really expensive? You know, you see a truck full of wood and you think nothing of it. But back during the pandemic, there were memes and stuff going out about a truck full of wood worth millions of dollars because the price of 2x4s and plywood and stuff you need to build a home, concrete, nails, and things of that nature, hardware, it all went up in value. Made even less homes becoming available new on the market. So the only thing available were homes already on the market, which means there were not new homes being built. There was less supply, and that caused price points to go up because of supply and demand. Another thing that went up during the pandemic, that's a comparable, not in the same industry, but was the video game systems, right? Do you remember when there was like a chip crash or chip shortage? No, not crash, chip shortage. There were not enough microprocessors, because the companies that were creating them overseas, there's a whole thing with China, and I think Taiwan is a big place where they manufacture chips for NVIDIA and stuff like that, because a lot of the chips manufacturers are in other countries because of the cost point, right? You can pay people pennies for a day worth of labor, where here in the US or other countries, you have to pay them a lot more. So a lot of things that we take in the US that are high value items are actually fabricated and manufactured in other places because it's so much less expensive to do it there than it is here. Anyway, that's another comparable, because Xboxes and PlayStations were going for $1,000 back during the pandemic, when a new console is supposed to be priced around maybe $300 or $400. So that's another example of how it was so expensive because there was not enough supply and too many people wanted it. So they had to raise the price point on the product so people wouldn't buy it. Because if you have two people come to buy something from you and they both have the same amount of money, then you just pick one of them and sell it, right? But if you have two people come to buy something from you and one has a lot of money and one has less money, typically the person with the more money is going to buy it. Because if you have it set at a certain price and the person with less money says, hey, I have this much, but that's all I've got, and another person says, hey, I've got more than that, I'm willing to pay you for it to get what I want, anyone that's not, maybe a little slow in the head is probably going to get it to the person who's going to pay the more money. And that's pretty much what's happening with the housing market. So the first reason that I don't think there's going to be a crash anytime soon is because of limited supply. Now, another thing I like to do when I'm giving people free game is resources. So here's a resource I want you to look into: Federal Housing Finance Agency. And guess what they do? They look up information and compile data about homes. They can show you about homes all across the nation, what states have the highest growth or the slowest growth, what the pricing of homes has done over time. They show you about what the interest rates of homes have done over time. They give you a lot of data information just about homes and everything home and housing in general. And an index is there to compile information and show you sort of the trend of where things are going when you compile a lot of information together, similar to stocks. I talk about that in the investment course. But basically, if you look at the data from the Federal Housing Index, you can see there's a lot of things there that are contributing to this factor of why there won't be a crash anytime soon. Okay, first of all, we talked about the supply. Next, I'm going to talk about the interest rates, right? So the interest rates have been rising from the Feds, right? They've been saying they're going to increase interest rates. Well, when interest rates go up, guess what people don't do as much? They don't buy houses because you got to pay more for your house. Average housing price in America, right? Not the average, like the median house that most people buy is somewhere between $250,000 to $300,000, right? For a single family home. That's the majority of America. Because you look at the median income within America, $50,000 to $60,000, and then you look at how much at $50,000 or $60,000 you can afford in a mortgage. Normally it's about $250,000 to $300,000. And let's say back during COVID, if you bought a home that was worth $250,000 and it fit you, and you had a low interest rate because of the COVID low interest mortgage times, you got an interest rate like, let's say 3%. Let's say your house payment was around $2,000 per month, right? Well, right now, a couple years later, because of what's happening in the world and supply and demand I just talked about, your house that you bought at $250,000 is worth $400,000 to $500,000, right? And it depends on what area you are in the country, but on average, they've just about doubled in price almost, or gone up at least 50%. So from that doubling or 50%, 50 to 100% in growth, you would not sell. If you did sell your home, you would make a lot of money from it. But if you were to buy the exact same size home that used to be worth $250, it's now worth about $500. So if you were to pay $500 for it now, not only are you paying more money, all the profit you would have made from the home that you had, but you're also going to be paying a higher interest rate. And at a higher interest rate, if your mortgage payment was around $2,000 a month, now it's going to be $4,000 or $5,000 a month for the same size home, because the prices of the home are higher and the interest rate of the home is higher. So this is also why back during the COVID times, refinancing was a big thing for people to do, because interest rates are lower than what you purchased your home pre-COVID times. So you were able to borrow money from your home and take it home at a lower interest rate, so you get money in your pocket and have a lower mortgage payment, which for a lot of people that was taking equity out of their home. Well, right now, refinancing is not very popular because interest rates are higher, right? If you refinance your home into a higher rate, that means you're going to increase your monthly mortgage payment. So unless you really need to take some money home, most people are not really taking equity out of their home because the interest rate is going to be higher than what it was before. What's more popular for people to do now are HELOCs, home equity line of credit, because in that instance, you can take money out of your home without having to refinance your interest rate that you have on your home. That's more the route people are going nowadays, but that's another tidbit of why I don't see the supply of homes, or not the supply, I don't see a crash happening in the housing market, because interest rates are raising. And as interest rates continue to raise, less and less people are going to continue to purchase homes. Many more people now, because of the pandemic, are working from home. That means a lot of people are wanting homes or places to stay, and that is causing more demand for houses. Too many people want a home, they can't afford one because interest rates and price points are higher, and that's creating this higher demand and scarcity, which is creating these higher prices. So that's why I don't see a crash happening, because there has to be something happening in the market where no one has demand for a house for this market to crash for homes. So when the time comes and nobody wants a house, everyone selling a house then has to lower their price point. And when everyone lowers their price point, it causes the price of all the homes to go down. But if more and more people keep wanting homes and can't get them, it's not going to cause the prices to go down. They're going to continue to go up. There could be some fluctuations here and there, but if you're waiting around for a huge crash before you think about purchasing a home, then I think you're waiting around for the wrong thing. I predict the housing prices to continue to rise. I also predict that people that already own homes or own rental properties are going to continue to make more money in their rental properties, because more people that want to buy a home can't buy one, and everyone needs a place to live, so they're forced to rent. Because there's more people renting, there's also going to be more demand for rentals. Rent prices are going up as well. So as these interest rates continue to rise, as supply continues to be low, as demand continues to be high, prices for rentals and for homes are going to continue to increase. And the price points are going to become stable because people are not offloading the homes they have. It's a conundrum, all right? So if you're looking at buying a home, I'd say, think about average time in America that someone stays in the home is about 7 to 10 years, right? So stay in your home 7 to 10 years. If you give it that much time, it's a good investing tip. You'll stay there long enough to increase that value on the home throughout any little minor fluctuations. Probably not a crash. If you're talking about the investing side, which is what I'm into, and I talk about the investing course, there's something else you can consider. REITs. If you don't have enough money to get into real estate directly, but you still want to invest indirectly into real estate, there's something called a REIT, okay? It stands for a Real Estate Investment Trust, REIT. These are companies that invest wholly in real estate. And guess what they have to do? They have to pay, I think it's 90% of their profits out to their shareholders. So if you own some of that company, you get a dividend and they pay you. A lot of them pay monthly. So what you can do is create for yourself monthly income through your investing portfolio by investing in REITs. Now, what do REITs invest in? Well, since they're real estate investment companies, they buy single-family homes, they buy apartment complexes, they buy condos, they buy hotels, they buy commercial business places, they buy a lot of spaces for real estate. And as I just explained, real estate's not going anywhere and they're going to keep making more money. So guess what the REITs are going to do? They're going to make more money. If you invest in the market in a REIT, you could spend as much or as little money as you want, literally, and purchase shares of those companies. When you purchase shares of those companies, guess what you're going to get paid? The dividend. That's like your rent. And guess how much money you had to put in? As little as much as you want. If you had even $5 you want to invest into a REIT company, you could find a REIT, invest $5 into it, and whatever percentage of a share you got with that $5, you'll get that percentage in dividend every cycle that company pays a dividend. So REITs could be something great to get into to start creating some passive income for yourself. without having to invest hundreds or tens of thousands of dollars to purchase a property and have some real estate. So at whatever level you're at, there's something you can do to help start increasing your passive income flow. Now, there's some other details you want to look about REITs, see about taxes and things of that nature. Do your own due diligence or research, but that's another term to look into, REIT, and see what it can do for you. And I hope to see you next time on Little Talk with Action Jackson in the morning.